We do have some breaking news right now. I want to get straight to it. It's a new AI partnership, and it is fascinating. AMD's stock is surging. OpenAI and AMD getting together this after OpenAI, of course, doing a deal just a week and a half ago now with Nvidia.
Artificial intelligence is being adopted faster than social media, faster than computers, and faster than the internet itself. Money is rushing into this space, but most people are sleeping on the opportunity. If 2026 ends up being the next wealth wave, you don't want to be standing on the beach. You want to be paddling early. Today I'm going to show you 7 AI and tech stocks I'm watching for the long term, and I'm going to explain how to invest the right way. Because just buying random stocks and checking them every week is how people lose my whole investing. Philosophy is simple. Buy great companies, hold them for at least 3 to 5 years, and keep adding over time. Don't panic on every dip. Don't try to outsmart the market every month. That's a trader's game, and most traders lose. There are 2 very different games you can play. One is investing, owning quality companies for years and letting them compound. The other is trading short-term bets, often using options, trying to time every move. Trading looks easy online, but most people lose money. You might get lucky at first. Maybe you buy an option and double your money, but luck isn't skill. Eventually, one bad trade wipes out months of gains because there was no foundation. The goal is to build wealth, not gamble. So before you invest, get the basics right. Have a checking account for bills, a savings account for emergencies. Then use an investing account for long-term growth. Dollar cost average. Buy a little each month. Diversify. Don't throw your whole account into one stock. Over most 3 to 5 year periods, the market has historically gone up. Not guaranteed, but the odds improve with time. Many beginners panic when a stock drops for a year and sell at the worst time. Great companies can have a bad year and then crush it later. Take Nvidia for example. It's had stretches where it dropped more than 50% before making massive moves higher. People who held and kept buying ended up with life-changing returns. Same idea with Google, Microsoft, even Bitcoin. Long-term patience usually beats panic selling. I like to think of as a stack. At the bottom are the chips that power AI. Above that are the cloud platforms like Microsoft and Google. Then come the applications that use AI at scale, like Meta and Palantir. Finally, the broader technology layer that ties everything together, the NASDAQ itself. By owning companies across this stack, you're not betting on just one piece of the puzzle. Here are the 7 AI and tech stocks I'm watching. Nvidia is the AI chip king. Their GPUs power training and inference, and their CUDA software keeps developers locked in. Demand from data centers and enterprises is exploding. It's volatile, but it's the backbone of AI compute. Microsoft is turning AI into profit fast with Azure AI, Copilot across Windows and Office, and its OpenAI partnership. They already dominate the enterprise, and now they're embedding AI everywhere. Google or Alphabet has DeepMind, Gemini, Cloud AI, and a massive data advantage. They're weaving AI into search, ads, YouTube, and productivity tools. They have cash, infrastructure, and a habit of winning long-term. AMD is the challenger in AI chips, pushing GPUs and accelerators into hyperscale data centers. The AI market is so big that second place can still thrive. It's higher risk than Nvidia, but has strong growth potential. Meta runs AI at massive consumer scale, powering Reels and ads and open sourcing its Llama models. It's spending huge on infrastructure now to boost advertising efficiency and build future products. Palantir turns AI into real decisions for governments and enterprises. Their IP platform helps clients build AI workflows fast. It's volatile, but if adoption sticks, Palantir could scale massively. And now, this last one isn't a stock, but it's one of the smartest ways to invest in the entire AI and tech sector. The NASDAQ 100, or the QQQ ETF, QQQ gives you exposure to to around 100 of the largest tech-driven companies in the world, including Apple, Microsoft, Nvidia, Amazon, and more. It's a great option for people who don't want to pick individual names but still want exposure to cloud computing and innovation. The reason I include QQQ is because it smooths out the risk of one stock underperforming, while still letting you ride the overall tech wave. So even though it's not a single company, it's highly recommended if you want broad exposure to the entire tech ecosystem. When I think about sizing positions, I break them into buckets. Core positions, Nvidia, Microsoft, and Google. Get the biggest weights. Growth names, AMD, Meta, and Palantir. Get medium weights because they're higher risk but have big potential. And then for broad diversification and stability, I include QQQ as a sector foundation. That way I'm covered both on the individual winners and the overall trend. Most people want quick results, 1 month or 3 months, but that's trading thinking. With investing, you buy quality, add on dips, and commit to 3 to 5 years. Drawdowns are normal. What matters is owning more shares when the price is low and letting time do its companion. If the market falls next year, I keep buying. That's dollar cost averaging. You don't have to predict the bottom. You just need a plan you can follow. The number one rule people quote is don't lose money. Practically, that means don't invest money you'll need soon. Fund your savings first. Diversify across names and sectors. And keep your time horizon long enough for businesses to execute. Build the boring structure so the exciting stuff doesn't blow you up. A lot of beginners start during a bull run. Hit a few wins, maybe an options trade that triples and think they've cracked the code. Then volatility hits, position sizing is wrong, and risk wasn't managed. Avoid the lucky start trap. Build habits now. Dollar cost average. Diversify and commit to a 3 to 5 year plan. A simple blueprint that works for a lot of people is to buy every month. Keep your core names big, your growth names medium, and use something like QQQ to anchor your portfolio. Revisit every few months to see if the thesis still makes sense. Celebrate how many shares you've built, not just the price. If you want more guidance on building a solid money plan, check out my free newsletter and my website. The link is in the bio. And grab my book, Stop the Little Leaks That Keep You Poor. It's all about plugging the small money drains that keep people from investing consistently and building real wealth. Investing is about patience and discipline. Don't chase the hype, don't panic sell the dip, and don't blow up your account trading what you don't understand. Build a strong base, diversify, and think in 3 to 5 year windows. That's how you give yourself the best shot at riding this AI and tech wealth wave. And finally, this video is for educational purposes only. It's not financial advice. Always do your own research, understand the risks, and invest responsibly.
Thanks for watching The Real Money Tree, your spot for investments, news, and wealth tips. If you found this helpful, hit like and subscribe so you don't miss the next video.